Hey everybody, it's Brett with a quick market update. Markets have been pretty volatile here in the past couple of weeks, and I just wanted to give you kind of an end of summer update, what I'm seeing happening, where we're likely to go, when the volume's likely to come back into the markets. So as you can see, we've got a sea of red here in the charts. We had a couple down days here and a little bit of a bounce yesterday, and not much to share or dive into here. That's not a big surprise. But I did want to point out here this chart, and this is a daily chart of Bitcoin. We'll look at some macro market charts here in a minute. But my fear is, to this point, we could be forming a head and shoulders pattern. Previous to that, I thought this was a head and shoulders over here, but it was in this nice uptrend. I have another chart that'll show that uptrending channel, which has now been invalidated. If we take this trend line here, or actually redraw that channel, which I thought we were still in here, but since that's been broken right here, that's been invalidated, that upward trending channel. So now this scenario that could play out here is this. This is the head. It's kind of not much higher than the left shoulder, but if we get a bounce here, I'd be looking for this thing stalling out and possibly coming back down, and a break of the neckline, which is around this 25,600 level, give or take. As we know, the 25,300 level was a very important level. I'm actually going to redraw that because that 25,300 level is so important from all the way back here in August of 2022. And then a little bit before that, it acted as strong support all the way back in May of 2022 when the markets came down hard, bounced off that level, came back, broke through it. Then it became resistance back here, and then up again here, resistance, flipped as support. So we're at support right now, and really need to see that hold. Typically, these important levels break on the third or fifth attempt, in my experience. So if this is the second attempt here at breaking below, if we do push up from here and it stalls out and we can't get above, that 32,000 level, which is a very important level as well. If we zoom out to this range and this line here, we can see that 32K level. So I've been saying for a while, the 32K level has to break on a closing basis to then break up higher to possibly that 48K to 50K level. So, but anyway, just to continue this thought, we're right in this area right here where yesterday we had a little bit of a bounce after the big drop, but today we're down a little bit. So, I think it goes sideways, pretty uneventful week. Although the eyes are on Jerome Powell's comments tomorrow, Friday, and we'll see what he has to say at the kind of event that he's at. I'll pull up the news article in a minute. But if we were to take this head level, the measured move on a break below that would put us considerably down lower. And so basically, let me get rid of this. You can see I have it labeled with a CME gap. We'll talk about that here in a minute. There's a CME gap down there. So a break below this level puts us right down in that CME gap range, and that's right around that 20,000 level. So this is an area to watch, whether it happens sooner or later. This is kind of a magnet area, an unfilled CME gap here. So, and then this Fibonacci golden pocket, if we draw that from this kind of cycle low right here and the local low up to the recent high that we had on this possible head and shoulders, the measured move on that, the golden pocket would put us right in this kind of upper range of this area here. And that would be between, say, 21,700 and about 21,200. So, and these things can certainly overshoot. These are some levels I'm going to be keeping an eye on and recommend that you guys, we all do as well. So anyway, with that, let me zoom out a little bit. Even on the shorter time frame, looking at a 4-hour chart, I do see more downside here based on our indicators, the early reversal indicator triggering here and confirming with this trend strength indicator heading down lower. This is, again, a 4-hour chart, so it's looking fairly weak. So we could actually break down on these levels. It's kind of hard to say on these this chart here, but let me jump over, by the way, and let's take a look at some other charts on the larger time frame, but also let's take a look at this DXY. So on the DXY chart, this was as of yesterday, and I'll pull up the live sort of surrogate for DXY and what it's doing today. But this 103 level, so important. If we zoom out here, that it was resistance back here, kind of flipped as support. You see this common theme, resistance and supports interchangeably flipping on themselves. So support came down, resistance back up and down, and broke up above it a little bit higher last time, but again, it hit rejected here on the 103 level. So you can see this question mark today. Now what I was suggesting is if we if we rejected here, came back down on the DXY, we sort of have this opening wedge here, this sort of descending wedge. And we'd like to see this come down because obviously DXY dropping, Bitcoin going up, and I have that labeled as kind of the crypto super pump rally zone. So that was starting to look like it was going to come back down and we get a rally in Bitcoin. However, that's not the case today. So this is one of the live version of this. It's pushing up above. So what we want to do now is sort of keep an eye on this level and be aware of if it breaks above, say 104.50, then we got some trouble here because the DXY certainly can go much higher, and that would mean this sort of wedge here, this trend line is broken and the dollar is heading higher. We don't want to see this up in this range because, as we know from back here, that was where the crypto markets were really bleeding out as the DXY was pushing up higher into this range. So keep an eye on that. We'll see how it closes for the day. Of course, it's depends, and it's always the closing bars. So we'll see kind of where that thing lands, and just to kind of hop through this a bit. Some of the other charts here. This is Bitcoin monthly. Here's the scenarios that had painted out or painted for us recently over the past few weeks. With these candles here, we had a nice buy signal here on our early reversal indicator and our trend strength indicator in January, which we talked about. And then sort of had a reversal up in this region. So this pullback is not unexpected. The question is, what happens here? Do we hold here at this sort of 25,300 level and see a push back up higher? Can we bounce? Or do we break down below it? And again, back to that golden pocket level that we just looked at on that shorter time frame. So with that, I'll jump over to a monthly chart, a little different look. Also overbought on this stochastics oscillator, stochastics RSI, coming back down. If we see this kind of crossing down below on this monthly time frame, then we could see some more downside in this range. We saw it happen back in July of 19. Does it come all the way back down or not? I mean, I think probably where it spends a lot of time up top and even double tests and then comes down, we'll see it full cycle as we saw in the 2017 high down into the 2019 market crash, and also recently 21-22. So we're hoping for just a little bit of a pullback and then a push higher again, where we can hopefully get into the 2024, 2025 rally cycle. On the MACD, we did push higher a little bit on this monthly. I was telling people to get out of the markets back in January, actually sooner than that, but really pounding the table in January of 2022 when this crossed over and the MACD went red on a monthly basis. But this perfect parabola here kind of going green as we see, but that's we've seen that before where it finally goes green and then it just sort of languishes, goes sideways for a while. So we really don't know. We can't really make any determinations there other than it looks weaker versus stronger and more likely to go lower. So anyway, let's look at this a little bit tighter here and we'll look at some other coins. This is just another way of the hand-drawn version of the head and shoulders pattern where it could come down to in these regions. And so again, that we already looked at that, but the Fibonacci on the positive side, again, if we break above 32K, that golden pocket puts us right between 48 and 50K. So I was hoping we would see that play out here by the end of the year in 2023. Remains to be seen how that plays out. Probably now looking like a bull market sort of beginning back into October, November. We'll have to see on that. So, but on the weekly basis, also want to look at the bull market support band. So I'll go ahead and clear out some of the all the diagrams. The problem here is we're back below the bull market support band on a weekly basis. And as you can see, when it does break below the weekly bull market support band, it tends to be there for a number of weeks. So since we did close last week, this past Sunday, below the bull market support band, it would indicate further downside. It may be 4 to 8, 12 weeks as we've seen. So 4, 8, 10, 12 weeks over here. This was a little bit longer. And of course, this break was quite a bit longer. So, some pullback here as expected. It could push back up to retest it like we saw in this range, but really needs to come back above that bull market support band, get above the 32K, as I've been saying, and then we can get back to business and get back to the races up going higher. So with that here, I'll just zoom in a little bit on a daily basis and take another look at this here. So again, as I was saying, we have this nice upward trending channel. I'll take this Fibonacci off because we've looked at that. And this is what we were holding on to. But in this break and invalidation of that upward trending trend channel, now we're into call it different pattern here. All bets are off on the upside. This upward trending trend channel now invalidated. So thought we'd push up to this fib golden pocket here again around 50K, pull back and then push higher. Eventually we likely will, but this market structure has now changed and we can't rely on that. So let's jump over here just to another here. This, of course, is our Bart Simpson. Now, when I was saying this a couple of weeks ago, I'm like, this is starting to look like a Bart Simpson, you guys. And sure enough, it traded off to the downside. We're kind of seeing this on the total market cap. I'll pull this up in a minute, and we'll just copy old Bart there to bring him over. But, this was not an unexpected drop when we were up, chopping away here, up and down, as we've seen this pattern play out many times before. The question still is, where did we go from here? How far lower can we go? Before we jump into some of these others, let's take a look at Ethereum. And I guess you could also say Bart Simpson in this little range right here. Now, once you see it, you can't unsee it, right? So seeing that Bart Simpson dropped a similar type of pattern. But with this here now, we lost 1,700 on Ethereum. It would indicate that we could head lower in kind of a support resistance zone. It remains to be seen. I mean, technically, this could hold. We just have to keep an eye on this thing. And one thing I might recommend is selling half positions. If we think it's going to break down lower, sell half or a portion of your trade with the intent of buying it back lower, dollar cost averaging. That way you're still in the trade in case the markets rally higher and you're not playing the amateur game of going all in and all out with your trades. So with that, we could take a quick look at that CME gap here with the Chicago Mercantile Exchange version. So where's that gap? It's right in this range. We do have a gap to the upside, so we could push higher here, fill that gap, and then go lower. But this is the biggest unfilled gap we have, unless and except for way lower around 98.75. There's still a CME gap on Bitcoin just below 10,000. I don't think we go that low at this point to take a really major shock to the system, Binance imploding, or even worse, for Bitcoin to get below at sub 10K. If we see something like that happen, the limit place to put buy limit orders is right at 98.75. That would be the lower edge of that CME gap. Not financial advice, just saying where that exists. And then of course we have CME gaps up higher here, but of course that'll happen. This one's been filled once the bull market comes back, very likely, of course, these will be filled at 35K. So the one we're watching for on the downside is this one right here. So that's at CME gap and acts as a magnet. So this little green arrow represents what could happen. Of course, I've had that there for a while. At this point, it would be more like this, extending it out in the future. And we just have to see. There's no time limit or time predictions on these CME gaps. And we don't have time to go into kind of why they exist, but they do tend to pull price toward them. We could also look at sort of the overall there's a chart here somewhere. I've got the fixed volume profile where it's essentially the VWAP on this, putting it right down in that same price range. Don't need to go through all of these, but we've already covered it. Let me do this. Let me just jump back over to this and the charts that we have here. One of them, let's see. I want to jump. Well, I'll just keep going. Let's go to the US Bitcoin dominance real quick here. Still pushing higher. Bitcoin dominance pushing higher as it can. ETH dominance has really stalled out. So any push in the markets or new volume in the markets going higher, we'll see ETH dominance, rather Bitcoin dominance, pushing higher and all the way up in this range here where it has been before, kind of indicates the beginning of the bull rally. So that's what we want to see. And I have alerts set at that 52% level for the Bitcoin dominance to give us an early clue. USDT dominance also on the rise right now as money's flowing out of Bitcoin, Ethereum, the crypto market, as fears rise with this news tomorrow. But here going sideways, slightly up. This is that USDT dominance upward trend channel, and it's been trending up for quite some time. So we want to keep an eye on this. We can even add widen that because if this starts to break, that would be another signal that the bull market's here as money pours back in to crypto and out of stable coins like USDT. So it's another one to keep an eye on. And with that, so let's go ahead and look at the total market cap. I told you about this, and I have Bart Simpson here waiting for us. Let's see, where's our better Bart? We got this better Bart here with the better hair. So this is the issue here. Well, we saw it already kind of break down, that Bart Simpson on the hair. So the question is, do we hold? Very important that we hold at the $1 trillion level. You can see I've got a red line in the sand, and I've got an alert set on here. If we go below $1 trillion on the total market cap, we've got trouble below, folks. So we want to keep that in mind. And so where might you want to start looking for reaccumulation zones if this does break lower and we start heading below that $1 trillion mark, likely down into this 750 to 850 billion market cap on the total market cap. So that might be a good place to start reaccumulating some Bitcoin and crypto. Just don't know what's in the cards at this point. So we always want to look at all the different scenarios. So with that, that's about all we have time to cover. Mostly a sea of red. Most of these coins looking pretty bad, breaking down below key support levels. AVAX down below $11. So I would not be really being very careful. Would be very careful right here. If it does come down, you can see I have an alert though at this bounce point. These would be areas to potentially dollar cost average and look for some bounces on these areas, but be careful. And I do recommend stop losses here. I have Phantom Coin, was considered thinking it might hold here at support at 22 cents. So this arrow has been invalidated. Phantom Coin continues to push down lower with some problems on the network and recent issues there. So it's still a great project. Would expect that to come back. Rune is down 6%, but also because it's had a nice push higher. Rune did have a nice bounce buck up above its lows here. It had a nice little rally out of this region going up about 150%. So no surprise that Rune is pulling back. But also want to point out on Rune is that on any pullback would be an excellent place to pick some up, because if it gets back to its old highs right over here, that's a potential 20x, you guys. So 2100% from down in these levels on a pullback. So even at current levels here, about 14%. So what would we be looking for here? Maybe a new upward trend channel to bounce off of. I love to find these early and to draw those. So if it comes back down to support, whether it's 2150-day exponential moving average or the lower edge of this upward trend channel, might be a good spot to sort of start dollar cost averaging into something like Rune. So that's mostly what I'm looking for these days, is the ones that have the biggest potential. If they just get back to their old highs, is there a 10 or 20x potential on these? And that's a great risk reward ratio versus some of the other ones that might only get 4 or 5 times X back to their old highs. So keep that in mind. And here's one example here with ADA Cardano. If it does bounce off these regions, gets back up to old highs around $3, that's a 10x. That's a 10x. If you like Cardano, it's kind of finding support at this 24-cent level. We will be watching for our custom indicators that we use, our early reversal indicators and trend strength indicators. But just seeing a lot of flat markets, low volume, not a good time to be really diving into this market unless you start seeing some really strong charts. So let's see, chain links, some of the tier ones are still in a downward trending pattern there. I think sand and let's see, there was sand and mana was looking at the other day, but just still in these downtrends. You don't want to try to catch falling knife. So I would advise caution here. Even Polygon Matic thought we might have a V-shaped or W-shaped recovery and bounce off this trendline support or this double support here, but it's breaking down. So I think there's more downside for Polygon Matic. I've got alerts set down here around 38 cents. So where that was previous support, that would be a better place to try and catch these. But again, be very careful not to try and catch a falling knife. Lots of red today. Markets feel weak. If we were to jump over into some other coins here that are looking good, I don't know, you guys. It's just not a whole lot looking great. Solana pulling back. Now, Solana looks interesting in that it's pushing into a new upward trend channel. Potentially, it's just kind of a janky channel. If we did something more like this and widen the channel, then it's not. It's still in its trend channel. So, that's what we have to do. We are putting in higher lows. So I have an alert here set at 28.50, well, about $29, which would signify a break up above that upward trending trend resistance channel, whatever you want to call that. Okay, so keep that in mind. Fortunately, BNB has sort of stabilized. There were some rumors floating around that Binance was selling their Bitcoin to stabilize their Binance coin BNB, And, certainly may have been true. Let me clean this up a little bit. These lines are not as relevant. I'll leave this one on here as resistance. But, BNB coin down around 217. It still could fall down around 185. If it goes below 185, though, I have an alert. If you can see this, and it says BNB breaking down, sell. I'd sell the market because Binance going under would be catastrophic for the markets. And so if CZ is selling BNB, or rather selling its Bitcoin to prop up the confidence in BNB coin, it's certainly possible. So we have to keep an eye on this. And of course, this very important level here, which I have an alert, but just to visualize it, that's got a hold. If we start breaking below that, then there's skies falling potentially in the crypto market. We can't have another FTX. If Binance going under, somebody said, I saw a prediction that they would take Bitcoin down to 12K. I don't know if I believe that, but we have to be ready for anything and everything, you guys. So with that in mind, I think it's about all I want to talk about today. There's not a whole lot looking bullish at all in these markets. So, that's all I have for you today. We'll just kind of remind you that if you like these indicators and would like to find out how to use these in your own trading, that's something we've been doing very well with on these longer term time frames. Of course, weekly, our early reversal indicators here, red and confirming with the trend and strength indicator there. We sometimes we don't need this TSI stochastics. These two things have been very good in calling these market reversals, and especially on the downside and the bottoms here, like we saw in March of 2023, ERI, TSI going higher. July of 2021 caught the market bottom to the day and to the week. That's a little farther out. But when these two confirm, very high probability that they're correct on the upside, and we also catch market tops with these as well. So we caught the market top here and all the way back to on a weekly basis. If I zoom out a bit, these are very strong in calling these macro tops. So back here at the market top here in November 2021, had that early reversal indicator confirming with this. So you can see these have been our secret weapon. You can find out more about these and potentially add them to your arsenal at moonstream.io/success. That's special arrangement with Success Council and with Max. So you can read more about these here. These are really powerful that give us an edge in our trading and our basis of a lot of what we do. But again, it's moonstream.io/success if you'd like to find out more. And I look forward to talking to you guys soon. Hopefully, again, if we see this bounce, just be careful. This head and shoulders pattern forming, and I would not be buying into any bounces here, chasing this, because more than likely we come back down and retest this again before going higher. So anyway, have a great week, everybody, and we'll talk to you again soon.